Welcome to the REI Roadmap Podcast. I'm your host, Matt Jones, and today we're going to be talking about why people invest in real estate, or more importantly, why you would invest in real estate. If your goal is to master any subject, it's vital to start with the foundational knowledge and principles on that topic. Building knowledge is a little bit like building a pyramid. Take a minute and visualize a pyramid in your head. Wide at the bottom, pointy at the top, right? Well, if knowledge is built like a pyramid and you tried to start building it with the pointy top, then it would just topple over, wouldn't it? Of course it would. It's silly to even think about building a pyramid that way. So to get to the top of a pyramid, whether a real one or a knowledge pyramid that exists in your head, you absolutely must start with a strong foundation. This is episode 1 of the Foundation series. You can listen to all these episodes in a row for a broad view of real estate investing, or you can start with an episode and then jump to the topics that interest you the most. If you're just getting started, I highly recommend listening in order because, to be quite candid, it's hard to know which investing strategies will interest or even suit you the most until you know what's out there. This is especially true if what you know or what you think you know comes from social media influencers or TV shows. Often, those types of sources have a vested interest in showing you only the exciting or dramatic parts, and they don't necessarily give you a realistic picture of what's happening. I assume that, like me, you operate in real life, and that you'll go through the entire experience and not just the parts that make it on TV or on your social media feed. I'm going to do my level best to bring you the truth on real estate investing, whether it's pretty or not. Our topic for today is a highly personal one. Not personal to me per se, but personal to each and every person that listens to this or watches this episode. And that topic is why invest in real estate. With all the different types and strategies of real estate investing, you can bet that there is something to suit almost every investor, and that there are many practical and concrete answers to the question, why should I invest in real estate? And while I'll certainly get to those, it's absolutely vital that you start with your own personal reasons for investing in real estate. If your investing strategy, no matter the benefits of that particular strategy, doesn't align with your personal goals and resources, then you are much more likely to fail in the long run. I'll start with my personal reason for investing in real estate. I invest in real estate for security. Personally, my goal is to be financially independent. I want to be in control of my life and of my time. Real estate investing is my retirement plan, and my goal is to be able to retire early should I choose to do so. Practically, that means that I'm not investing for funds to use today. I can choose strategies with a long time horizon that pay off over time or pay off at a later date. Someone needing to use the money immediately would probably choose to invest differently than how I personally invest. Just a handful of possible goals for other people include the need to replace the income of a spouse that wants to stay home with the kids, or to fund college expenses, or pay off student loans, or to generate money to support a loved one that needs full-time care due to health or a disability. It could be that you hate your job and want to replace that income, or at least set up enough of a safety net to quit and look for something else. Maybe you're investing in real estate to offset taxes from a high-income career, as a store of value, or to finance hobbies like sailing, owning a race car, or traveling the world. Whatever the reason that you are investing, take a moment and write it down. This will help you figure out what is best for you personally as we review different investment strategies in future episodes. Next, let's take a few minutes to take a personal inventory of your skills and your available resources. Do you have great carpentry, electrical, or plumbing skills? Whether you do or do not have the skills, are you interested in being hands-on and doing that type of work yourself? Will you hire it out? Do you have good management skills to oversee contractors or tradespeople? Do you have the time to visit the job site, meet with contractors, pick up materials? Would you rather avoid projects that need a lot of work altogether? These are important things to consider at the outset, as they will determine the criteria you set and what kind of projects that you're willing to take on. How will you finance your projects? Do you have a large savings or brokerage account that you're going to use to fund your real estate investing? Do you have friends, relatives, or potential investors that will help you financially? Will you partner with other investors? Do you have good credit? Can you live in an investment property while you fix it up? Or would you prefer to avoid that altogether? Do you have no credit, no money, and no outside sources for money? The answer to any one of these questions is not what's important. What is important is answering the questions so that you know where you stand and you know what strategies that you are most likely to be successful with. Time. Time is one of the most important resources that we have, and it's really important that you're honest with yourself about how much time you have available to dedicate to your real estate endeavors. The strategy that you choose, if you have 2 to 3 hours per day to work on real estate, is probably very different from the strategy that you would pick if you only have 2 to 3 hours per week to work on real estate. And it's drastically different than the strategy you would choose if you only have 2 to 3 hours per month to work on real estate. Be honest with yourself. How much time do you have for real estate investing? Okay, let's do a quick summary before jumping into the real estate component of real estate investing. First, define your reason for investing in real estate. Second, make a quick inventory of your skills, your financial resources, and the time available for you to dedicate to real estate investing. Got it? Great. Let's move on to some of the benefits of investing in real estate. Real estate has a relatively low barrier to entry. It's possible to buy real estate with no money down, either through a VA loan, FHA loan plus grant money, a special loan program from a specific lender, or through creative financing. If you occupy the property, you can often utilize an FHA loan with 3.5% down or a conventional loan with as little as 5% down. In many situations, you can even have the seller pay your closing costs to help you reduce your out-of-pocket expenses that it takes to get into that property. To have control of $150,000 in stocks, you generally need to have $150,000 of stocks. To have control of a $150,000 real estate asset, you can get in with as little as $0 down. But even if you put 20% down, you have control of that asset for just $30,000 compared to $150,000 that it's actually valued at. Leverage is a strong tool when used correctly. Cash flow. Income generated over your operating expenses and necessary reserves can be taken home by you as free cash flow to fund your life, your goals, or you can reinvest it to fund additional real estate investing. A tangible asset. When you purchase a piece of real estate, you own something that you can physically touch and use. A house can be used as a shelter and an office as a place of business. You can't live in your stock portfolio. Appreciation. Historically, real estate has gone up in value over time. Even better, when you pair appreciation with leverage, you're able to enjoy the appreciation of the entire property's value, not just the portion that you own outright. The appreciation on a $150,000 home is the same whether you have $5,000 invested or you own it outright and you have $150,000 invested. If it goes up 3%, it goes up 3% of the 150 either way. Another great thing is forced appreciation or sweat equity. You can sometimes force your properties to appreciate by making improvements, increasing the income generated, or changing the zoning and use of the property. Real estate gives you the ability to purchase below market value. You can search high and low, make connections, mail letters, put out signs, and a whole host of other activities to find real estate that can be purchased below market value, which creates immediate equity for you as the new owner. Mortgage paydown. With very few exceptions, you are paying down the mortgage every month with money that's generated by the property. This increases your equity and this makes you wealthy over time. Passive income. I and many others got into real estate looking for passive income, but I'll be the first to admit that most investing strategies just aren't all that passive. Still, there are very passive methods of investing available, and even the active investing methods usually offer a great return on your time. One popular strategy that we'll discuss, and the primary strategy that I use, is called the BRRRR strategy. It's not very passive, but the potential returns are great. Other strategies like buying turnkey properties or investing in real estate syndication can be very passive. You get to choose your level of active or passive investing. With some investing strategies, real estate can generate significant income quickly. Flipping houses and wholesaling offer great opportunities to make large amounts of money quickly. They also offer risk and they're on the active side of the investing scale, but they can be a great tool for generating money that you need in the near term. Tax advantages are another reason that some people invest in real estate. Now, of course, you need to consult with your tax professional for your specific situation, but some common tax benefits of real estate include many expenses that are tax deductible. The IRS allows you to reduce your taxable income by depreciation taken on the structure. Often, you can defer taxes on the gain when you're selling a property by completing a 1031 exchange. If it's a property that you occupied as your primary residence for 2 of the last 5 years, you may be able to avoid paying taxes on any of the gain as long as it's under a certain threshold, and that's a pretty healthy threshold. There are other more complicated tax benefits, and while we may dig into those in future episodes, I'd absolutely recommend that you have a good tax professional at your disposal to avoid any pitfalls, stay out of trouble, and still enjoy the tax benefits of investing in real estate. Diversification. Real estate offers great diversification when mixed with a larger, more comprehensive investment plan that includes stocks, bonds, and other investment vehicles. You can also achieve a level of diversification inside your real estate portfolio by purchasing different types of property or purchasing properties in different areas. You can use it. A popular investment strategy in today's market is investing in short-term rentals. If you own a property that you use for a short-term rental program at the beach or in a ski town and you and your family want to go enjoy that property from time to time, you can. I can't break out the beach chairs and umbrella drinks on my certificate of deposit at the bank, but I can do those things at my beach house. There are, of course, other less sexy advantages like running your business out of a commercial property that you own and in which the other commercial tenants pay the mortgage. Maybe have a storage building at one of your rentals that you utilize to store your tools or your toys. You can use a short-term rental near you to host visiting friends and family. The list goes on and on. Real estate is borrowable. What I mean by that is you can borrow against your equity. If you have equity in a real estate asset, there's a great chance that someone will loan you money on that equity. I can pull out equity from one investment property to fund the purchase of another, to pay for college expenses or just to live on that money if I needed to. You can even borrow the equity in your personal residence, although I recommend taking great caution with that strategy. As of today, money borrowed against a property is not typically subject to income or capital gains taxes, which is a great benefit as well. Real estate offers the potential for great returns. While not always the case, real estate purchased at a discount, financed at good terms, and operated correctly can offer a return well above many other investments. There is, of course, the potential for bad returns or even losing money, so you must be diligent in your investments. But done right, real estate can give you some really wonderful returns on your time and your money. In real estate, you can create your own little competitive advantage. It's not likely that I'm going to have any advantage versus anyone else when it comes to investing in the stock market. But by getting to know certain areas and certain asset classes inside and out, networking, building relationships, really knowing my numbers, I can have an advantage, at least in my investment area, when compared to most other investors. Because property values and rents generally go up over time, they can offer you a great hedge against inflation as well. In real estate, you have control of your investment. When you own a piece of real estate, you have control over that asset. You can decide to make upgrades to a property to increase its value or for tax purposes. You can decide to buy or sell an asset. You can decide what to charge for rent. You can use the asset. There's control in owning real estate that many other investments simply don't offer. Of course, like any investment, real estate has its own unique risk. Because I want to do my best to bring you the full picture for each strategy, we'll discuss some potential risk and downsides, along with the benefits to each strategy as we dive into them individually. While by no means a comprehensive look at real estate investing, I hope that this discussion has been a helpful place to start and that you have a better direction for your real estate investing career now than when we started. In episode 2 of our foundation series on real estate investing, I'll be talking with you about the easiest way to get into real estate investing. Most people call it house hacking these days, but it's been around for a long time and there are almost certainly more ways to use this strategy than you think. Join me for this and for the rest of the foundation series as we discuss house hacking, flipping houses, short-term rentals, long-term rentals, wholesaling, and a lot more. If you haven't already, be sure to subscribe to the podcast or YouTube channel to be kept up to date with the latest REI Roadmap episodes. Thanks for joining me today, and I can't wait to see you next time.